Welcome to the Capital Property Fund's June 2026 portfolio update. My name is Joe Christie. I'm an Executive Director at Capital Property Funds, and I'm joined by two of our portfolio managers, Noah Morabito and Xander Ryan. And today we're going to be talking about specifically the real estate, the CPF Real Estate Credit Fund, and some of the loans that form part of that portfolio. So I'll hand over now to Xander Ryan.
Thank you, Joe. I'll just start with a quick snapshot of the Real Estate Credit Fund as of the 1st of June 2026. So it currently has 27 active loans in it. It's on track to deliver a 10% annualized return for the June 2026 quarter. And the fund size is currently $16 million. When we look into the credit fund and a bit at its allocation, and we can see on the screen that it's got quite a large allocation to residential. So if I was going to add up the townhouses, land and land subdivision portions, you're getting quite a lot of residential exposure. And you're also getting a lot of quite a bit of industrial exposure, which we think are the two quite hot sectors at the moment. And we see foreseeable growth in those sectors. For those who don't know, the credit fund, it targets a return of 9%, but the last quarter and the quarter we expect coming forward, it's going to beat that return and be paying 10% to investors. And the fund has two redemption windows, the 15th of March and the 15th of September. So the 15th of September is the next one coming up, and any unit holders will have to give some notice if they would like to redeem their funds. Joe and Noah, would you like to add anything about the credit fund?
Yeah, I just want to speak to some of the benefits of the credit fund. So with those redemption windows, one of the things that comes with it is that for investors, you're always invested. And so what that means is there's no holdings in cash or anything like the debt fund. As soon as you're in there and you're earning that 9%. And this could be higher subject to the performance of the fund. So at the last quarter, we paid out annualized returns at 10% because the fund performed well. And also to that, investors can build a position in the fund by reinvesting their distributions. So with the debt fund, you can't reinvest distributions because they'll open and close. But with the credit fund always being open, you can reinvest distributions directly in the fund and build a position in there. So it's one of the key benefits of investing in the real estate credit fund.
Exactly. And look, the other thing is that it's set and forget. So you're not having that cash drag, which Noah spoke about. So you're getting everything just in one statement. So if you have more than a few loans with us, you get separate holding statements, separate tax statements, etc. With a credit fund, you have one holding, but you get exposure to all 27 loans. But everything is consolidated into one statement. So that set and forget, easy to manage, and as Noah said, you're always invested.
And as you can see on the screen, there's great diversification across 27 loans across a number of industries. So no, we really like the credit fund, and we hope that its continued performance continues for investors and its growth continues. I'll now look at a couple of the loans that are in the credit fund, and we'll just give a bit of an update on some of those. There's quite a few new loans this month, so we'll talk about them and just a bit of a snapshot of some other project updates. So I'll start with Obanvale. So this is one of our newest land loans. So this is a loan that will be a 6-month loan where they'll be getting their relevant approvals to do a 379 land lot subdivision. We've got a first mortgage paying 10.75% and a Class B second mortgage paying 19% per annum. Noah, what would you like to add to this one?
Yeah, well, I think we did a video last week with the sponsor here at Obanvale, Michael McCrudden, and he just talked to some of the positives around that loan. So it's 50 hectares of land there for a 379 lot land subdivision. And what we like about it is the local amenity there in the Hunter region. So you've got, close amenity to shops, retail, primary schools, childcare, and the lots are selling for around $300,000 to $350,000 per block of land, and it's just a great place to grow a family, and it's part of that urban sprawl. So that's some of the key things we like about it. And this loan will be 6 months to get their approvals, and then from there we'll do 9 stages of land subdivision and then roll out these lots. So it's quite an attractive loan, and it's paying 10.75%, which is fairly good risk adjusted position.
And just internally, we kind of view this as the next Spring Creek, a New South Wales Spring Creek that will be with us for the years to come. and there's a lot of demand for that residential housing. So moving on to Riverview. So this is one of the loans that settled on the 29th of May. We've got a first mortgage paying 10.25%, Class A, and then a Class B paying 17%. This is 21 industrial units, so they've submitted their DA and they expect it shortly after settlement. And they're selling at 19 of the 21 for quite an attractive price point. Joe, do you want to touch more about this?
Yeah, thank you, Xander. Look, what I really like about this loan, firstly, it's industrial. So Xander mentioned at the beginning of the presentation that industrial is a very good sector to be in at the moment. And also to the price point. So they're priced at around about $500,000 per unit, which is quite digestible by the marketplace. And so we expect once the product is finished, the sell down should be quite rapid. And we've just learnt that from other industrial projects that we've funded, is if they're the larger the price point, generally the slower the sell down is. So I think it's a great again, a doable deal in a great sector in southeast Queensland with a fantastic price point. So what's not to like about this opportunity?
I agree with you, Joe. Moving on to Margate. So this is one of our a new loan that'll be settling on June 5th. So we've got a first mortgage, a Class A first mortgage paying 10.75% with a 70% LVR, and then a Class B first mortgage paying 17% with a 75% LVR. They're going to be building 4 townhouses here. So Noah, do you want to tell us a little bit about this sponsor and what they're going to be building?
Thank you, Xander. Yeah, so this is going to be a builder-developer situation. So the borrower and developer builder is going to be, they're local to the area, Margate. It's just around the Redcliffe area. So these 4 townhouses will have sea views. It'll be a luxury product, and the benefits of them bringing all the building in-house is they can manage the quality of the finishes, and something that you really want in a premium product like this. And they're an experienced sponsor. They've lived in the area and they've done developments of this size and type before. So we have a lot of confidence around that for this particular loan.
Yeah, no, they're recently finishing off another project that's quite similar. So we can see that they can build it on budget and on time, and they can sell that product as well. So I'm really looking forward to seeing this loan be settled on June 5th and then moving into construction shortly afterwards. I'll now talk about Rochdale. So we've got a first mortgage Class A paying 10.75% and a Class B first mortgage paying 17% with an 80% LVR. This is the same developer as Tingalpa, which many of our investors will know. Mark, the developer here, is going to be building 29 industrial sheds and a cafe. Joe, do you want to tell us what you really like about Rochdale?
So many things to like about it. Firstly, you've used the words rinse and repeat. So Dexar or Mark Zadulich is probably one of our best performing borrowers. He builds a high-end quality product, and I think Rochdale will be a step up from Tingalpa. So some of the investors may have had a direct experience in Tingalpa. This will be at a higher level. When he did Tingalpa, we do an underwrite where we effectively is a feasibility of what we think it's going to cost to build and what he will estimated of what he's going to sell the finished product for, and he surpassed that. So he built below budget and sold above forecast, and he seems to be doing the same at Rochdale. So he's already got expressions of interest at around about that $8,000 a square metre, and they're bona fide expressions of interest. And I think we underwrote that loan at around about $7,300 per square metre. So it's a last piece of land in this Rochdale or Gardeners Road corridor. It's the best piece of land. He's building a really good quality product, much better than what is a finished stock within the marketplace. And also the size that he's building at around about that 200 to 250 square metre units. So again, highly digestible by the market for the marketplace. So look, I really, really like it, and I think the return of 10.75 is highly attractive.
Thank you for that, Joe. I'll now move to our final one that we're going to focus on. It's one in Bowral, New South Wales. So we've got a first mortgage Class A paying 10.5% and then a Class B first mortgage paying 18%. So this is one that's already been with CPF. We funded it at the end of last year for them to get their planning approval. So the sponsor bought 3 blocks of land next to each other, and now they've got approval to build 9 townhouses. We rolled this loan from that land loan to a construction loan on the 22nd of May. Noah, do you want to tell us a bit about this loan?
Yeah, so we've been really pleased with the sponsor. They've achieved the DA approval that we first set out the loan to back middle of last year. So now the facility is moving into a construction phase of the loan. They've still just got to get their CC approval, which is expected to be received within the next month or so. And then from there, we'll be on releasing funds on a cost complete basis for the construction of the 9 townhouses. And further to that point, CPF will have our own in-house development management team overseeing the site and overseeing the build, just to make sure it's on track for the life of the loan, and then looking ahead to sell down in about a year and a half's time. So, paying 10.5%, it's a really attractive offering for us and for our investors. So we're really pleased with this loan.
And what I like about it is it's a doable deal. It's 9 townhouses, so not complex to build, and not complex to sell down.
Yeah.
So
digestible the market.
Absolutely. Absolutely.
And I think that last point, Noah, about having the CPF development management team. So all these loans, apart from Obanvale, will involve construction. So CPF will be attending on-site meetings and ensuring that construction is going to plan. So that's a great point. I'll just finally do a bit of a rapid fire on some of the other loans that the credit fund is in and in the debt fund. So I'll start with Spring Creek East. So many people are aware that they got their new valuation of $30 million. So that was quite a significant uplift. And investors in that loan will be receiving a communication about how we're going to extend that loan for about 3 months to coincide with the termination of Spring Creek land. And then we'll push those loans together into a one Spring Creek land facility. So that's something that will be sent out shortly. So it's a great update there. The LVR has dropped significantly, and we're very comfortable there. Teralba, in the month of May, in New South Wales, there was significant rainfall, and that's just pushed their schedule back a little bit. So we now expect that they'll be repaying the loan at the end of September. So a little bit of a delay, but they're basically at the end of construction, and it's kind of that the loan is very de-risked, and they're just kind of in that sell down phase basically now. Marcoola, so this block of land, it was sold on the 1st of June. So unit holders will be getting a full repayment on the 3rd of June. So that's a great outcome for Marcoola holders, and we look forward to returning those funds. Narangba, so they've received their DA to build 47 townhouses, and now they'll be rolling into a construction facility at the end of June. And Toowoomba, they've also had a little bit of rain in Queensland, so that's been delayed till the end of September. The contractors are expected to complete work there on the 15th of June, so it's just been pushed out slightly, and then we've got that planned sealing process. So everything's going well there. Noah or Joe, anything to add on any of these loans?
I think you've covered everything there, Xander.
Oh, perfect. Well, thank you all for listening to the June 2026 portfolio update. We look forward to joining you in July and providing another update. Thank you, Noah and Joe.
Thank you, Xander.
Thanks, Xander.